We probably would need a lot more than 3 minutes to fully get to the bottom of the 25 or 50 debate that seems to still be raging, Mark, and it seems to have been reignited by, yes, maybe some data yesterday, but importantly, perhaps a Wall Street Journal article that a lot of people are talking about. What's your take?
Yeah, well, first of all, it is amazing we're seeing such volatility in the Fed blackout period when there hasn't been kind of massively consequential data. And as you say, there's that Wall Street Journal article. Some people feel that might have been directed there. We've also had Dudley come out, given an opinion piece saying he validates 50 basis points. So suddenly 50 basis points is back in play. I think what's interesting here is that the market is dovish itself. It wants to be dovish. There's enough of the market that feels that the Fed is behind the curve. I'm not one of them, but there's enough of the market that every time we get some kind of dovish reaction, we move quickly on the rate side to ease. When is the last time that you remember PPI having a bigger impact than markets than CPI, especially when both were roughly in line? And I think that shows that there is a real desire for the Fed to go 50 basis points from everyone out there. If they can get the pricing to 38 basis points priced by the time of the Fed meeting, I think they will deliver 50. I think that's that binary trigger moment. Maybe we'll get that through consumer confidence or maybe retail sales next week.
Yep. Mark, given the fact that it feels like we're in something of a relief rally right now, how will risk assets react to a 50 basis points cut from the Fed? Because the argument has been that if we get 50, that signals something is wrong. If we get 25, we are signaling that we are in a soft landing scenario.
At the moment, we're moving to the narrative that 50 is from a position of strength. It's getting at the head of the curve. Well, sorry, it's catching back up again because many people feel the Fed is behind. And therefore, I don't think there'll be a panic if there's 50. I think that'll be seen as aggressive move, will be very supportive for stocks in the short term. I will say, though, that even though we're in a relief rally at the moment, I haven't found the price action very comforting in the last couple of days, nor in the last couple of months for stocks. And I say that as someone who's still structurally bullish because I think the economy is doing fine and the Fed's dovishness will only help further. But I am still worried by the price action out there. But that said, even though the price action's worrying, 50 basis points will be a positive. It will not be seen as a panic move.
A positive in terms of the stock market, in terms of the bond market? Where does it actually show up, though, in terms of market gains?
Yeah, actually, it's a great question, Kriti, because you'd think obviously it's the bond market, and then I'm saying that the stock market is a kind of follow-on through from that easier policy. But funny enough, we've priced in such dovishness in the bond market that if we get 50 basis points there, everyone goes, oh, that's just front-loading it. It's not changing the path, especially if they do it from a position of strength. So ironically enough, that would be an easing move, which would be more supportive for the stock market if the Fed can kind of persuade people that, hey, we're getting back ahead of the curve, we're not panicking, we're just making sure that our policy is well calibrated, and that's supportive for stocks.